On the program now is Paul Miron from Msquared Capital. And Paul recently wrote a piece for his clients with the heading, "Is property a safe bet?" So I'm just going to put that question to him straight away before we sort of get into the detail of his story. Well, is property a safe bet?
Yeah, absolutely, it's a safe bet. Look, if in the last 18 months anything has showed us, is that the resilience of the property market. And look, property might, according to a couple of economists as well, property might go up another 10, 15%. And a lot of people is probably sitting at home and thinking, well, this current lockdown will have an impact. Look, it may have an impact. It might slow down that growth and it might be over a longer period of time, but we still see property being very strong.
Yeah. Well, one important part of your analysis is Reserve Bank modelling, showing how important interest rates are, interest rate cuts on property prices. That relationship was quite an interesting one.
Yeah, so look, Peter Tulip is the main economist who's done a couple of papers for the Reserve Bank. And one in particular, he tried to address what actually drives property prices. And obviously, interest rates is the largest key or component to that. But there's other components as well, which are quite important. So in relation to interest rates, a 1% drop in interest rates can carry property prices anywhere between 14% and 28% increase. Now, there's a couple of other interesting elements there as well. The other one is demand and supply. Now, demand and supply can be looked at in many different ways. And you being an economist, Peter, the first day at university when you teach students is looking at demand and supply and how that works. So if you actually have a restriction of supply of property, for example, you're artificially increasing the price. So there is a very interesting amount of information there. But obviously the current increase in property prices can be really taken down to two things: low interest rates, because it's become very affordable to buy property, and the fact that we don't have a lot of supply of property.
Yeah. And also we've got a new curveball coming along, namely the migration effect, which has been very good for property prices in Australia. And it's going to be subdued for quite some time, isn't it?
Well, look, depending on what material you're reading, if they open up the borders at the end of the year, we're going to have approximately 500,000 of people who permanently lived in Australia coming back, and they're going to need to live somewhere. Yeah. The most remarkable thing that, and even taken me by personal surprise, is when in the beginning of COVID, there was an exodus of those temporary people living in Australia, students, tourists, and things such as that.
People going home.
People going home. And despite that, property, especially, for example, apartments, which were which would carry the brunt of that element of people leaving, only fell 5%. So when they come back and there's still a shortage of property, what is that going to do to the market? So that's another unknown as well.
Yeah, and I guess it's also important to point out that because people can't travel overseas, a lot of people have been thinking about upgrading their properties. So that's added demand, but as you say, supply is part of the problem as well. What are building approvals doing at the moment, mate?
Well, the building approvals actually gone on a downward trend. And so one of the interesting parts of Peter Tulip's, which is the Reserve Bank's economist, is looking at future supply. So another paper that he wrote was quite interesting, is that the shortage of supply, for example, in Sydney, how much is that contributing to the average property price? So for example, a house, I've got the information here. So an average house in Sydney is 73% more expensive because there's not enough houses. So that's an extra $489,000 per house. What about an apartment? You're paying about $355,000 more, which is 68%. Now in Sydney, it's a higher premium than, for example, in Melbourne. Those percentages are 69% against a house versus 73 in Sydney, and 20% against an apartment versus 68. So as property prices continue going up, it's going to become, I personally think, it's going to become a very political question mark in relation to what about affordability? How fair is it that property prices are too high? How can we make it cheaper? And so the only way that you can make it cheaper is keeping the interest rates the same and having a lot more approvals for both houses and units.
And you make reference to the fact that Treasurer Frydenberg is actually establishing a parliamentary committee to inquire on housing supply. The revelations from that should be interesting.
Well, it should be interesting, and I think the conclusion's already there, but they're going to go through the whole process. Look, and I might be wrong. There are other ways to create supply and try to create affordability as well. Look, in a Bob Hawke era, there were talks for a high-speed rail network between Queensland and Melbourne. Now, this is more than 40, 50 years on, and we still haven't received it. Now, if they do create a high-speed rail network between Sydney, Wollongong, Central Coast, and other regional areas, what will that do to property prices? So, and especially given COVID, will people want to move to those areas because they have still good access to our city, but they can have that lifestyle. Now, land is restricted in Sydney. We can't really go far further past Penrith. So what is going to be the solution there? And I think it's going to be medium density in the inner circle of Sydney.
Now, one thing you guys do at Msquared Capital is that you provide finance to primarily business people, aren't they? And the business people put up their real estate, their homes and whatever, or commercial properties that have real value, and then you will lend, say, 65% maximum of that value. And that provide a bit of safety for the loans, and then people come along to you and give you money to lend to them, and the interest rates to the borrowers are high, but also the interest rates to the savers are high as well. But in recent times, we've seen question marks over the value of apartments. One was because of an exodus of Asian students and tourists and things like that. So CBD apartments became less valuable. But also there's been question marks over the calibre of building of apartments. So you as a business, what is your attitude towards apartments as collateral behind some of the loans that you're making? Has it changed?
Look, it hasn't changed because we've always, look, there's always a risk in relation to high-rise apartments. But I welcome a lot of the changes that are happening from a legislative perspective. And I'm not sure if a lot of people are aware, from the 1st of July, the stringent nature of the legislation in relation to the quality of what you need to do and the monitoring done by the government is a lot higher level than it was done previously. David Chandler is very vocal, who's a building commissioner at the moment. He's very vocal in relation to what's the most delicate way of putting this, is actually monitoring very closely of the developers who are putting product to the market.
Dodgy developers. This is a bit
the dodgy developers.
Weed out dodgy developers who really are inflicting unbelievable losses on unsuspecting consumers who buy their stuff.
And it's unfortunate for the 1% who do the wrong thing, they spoil it for everyone else. So look, the construction costs are going to increase, but I think there is a structural change happening with apartments as well. So apartments traditionally has been for the obviously student and the transient individual. So what do I mean a transient? We still have a natural infliction in relation to our perception in relation to apartments, is that I'm buying an apartment, it's only going to be temporary. It's temporary until I can save enough money to buy a house. But if you look at Paris, London, other major cities in the world, units are looked at very differently. They're looked at, it's as equivalent as livable as a house, but you have the amenity and the proximity where you want to be. So I think that there's a big structural change right now happening with apartments, whereas instead of trying to build a 2-bedroom apartment being only 75 square meters, which is the minimum ADG design guidelines, which is the design guidelines done by from a state level, people are now building larger 2-bedroom apartments. They're building it with studies. They're building with a lot more amenity. They're building it higher luxury, bigger balconies, making sure there's a lot more sunlight. And I think that a lot more people are going to be attracted to that change in lifestyle as well. From a demographic perspective, there's a huge amount of empty nesters, for example, who are reaching a age where their children have left home. They're living in a 5-bedroom house. It's hard to upkeep it. And a 3-bedroom apartment would be perfect for their lifestyle requirements. So I think there's a structural change happening right now. And the perception is going to be changing over the next 2-3 years.
One last thing, because of lockdowns, it clearly is putting pressure on the Reserve Bank to make sure that the Australian economy grows strongly out of this? Do you think it actually makes their call that they might not raise interest rates to 2024 more believable than it was, say, 6 months ago?
Absolutely. Look, every day that we're in lockdown, there is a lot more damage done to our economy, and it's a wealth effect.
Yeah.
Is that if they increase interest rates too early, it's going to make us less confident in relation to our wealth, less likely to spend money. So I think that we're going to have these long-term interest rates, or low interest rates, for a lot longer than what we originally expected. So the longer this lockdown, it's one of the tools they have to make sure that we come out of it strong.
Thanks for joining us, Paul.
Thank you so much, Peter.
That's Paul Miron from Msquared Capital.